Mr Price Group is principally a value-orientated, cash-only fashion retailer. They retail apparel, homeware and sportswear and have a market cap of 25 billion rand. The group opened 17 stores and closed 3 since the end of September 2011, and it has a price-earnings ratio of 23. Philip, just looking at their latest quarterly update, sales constitute just around 80% of overall sales, cash sales that is. What does that mean for a company like Mr Price when most of their earnings are coming from cash?
I think it really shows that the company's defensive. The others are obviously all related to the credit cycle. Mr Price is a great stock in that when things are tough in the economy, people buy down to Mr Price. When things start to pick up, they manage to keep the customers that have bought down. They manage to keep that customer loyalty. And when economies do start to move, it becomes an aspirational brand for the low LSM levels that then buy up. So, yeah, the 85% cash that they're in, I think gives them a defensive quality that the others don't have. And I think that's where they will maintain that position.
Let's look at their model relative to the other ones. What are your thoughts on Mr Price right now, given the fact that they are very reliant on those cash sales? But of course, as Philip's saying, they manage to have this defensive stance, whether you're in good times or bad.
Yeah, I like it a lot. I mean, for people who want to shop, there are other places they can get credit, you know, African Bank, Capitec, etc. Those opportunities then are passed through, and they, being Mr Price, don't have to engage in the complex business of building a credit vetting system. Because the real issue with credit extension isn't finding the customers. There are plenty of those. It's knowing who to give the money to and how to transition clients from giving them small sums at relatively high interest rates to giving them larger sums at relatively low rates. And all of them, it's a judgment call, because when the going's good, it all looks fine, but when things get tough, it's not so easy. So Mr Price really, you know, came right out of Durban, and they had a perfectly pitched model for that lower middle income customer, and they really have done the procurement very well. The clothes themselves are almost all manufactured on a bargain basement price, sourced at the same places on the Pearl River in China, where, you know, jeans are made for almost every retailer around the world. So they do the whole sort of accessories and stock management stuff very well. I go in there often with my 13-year-old daughter, and she buys stuff, and she doesn't seem to worry that it doesn't last all that long, because by the time she's you know, buying something else, she's grown out of it anyway.
Paying 80 rand for a pair of jeans or something,
exactly.
It's just really not, you know, it's not a big hit on the budget, and you can take the fact that 6 months down the line, those jeans might start looking a little bit worn out. There has been some criticism of Mr Price in terms of its sourcing from China. Is this something that could come to the fore as corporate governance issues, King 3, as we start to scrutinize companies and where they source their goods from?
Look, if our local retailers are going to be globally competitive, they've got to source where they can get things cheapest. And I don't think it's Mr Price is alone in sourcing from China. I think many of the others are as well. They source from other markets as well, India and the like. But basically, as Paul mentioned, they're one of the better ones at sourcing, and that's one of the keys to their success.
It's a stock also that's rallied in line with where Woolworths has rallied. It's up around 60% year to date on a 1 year basis. It's up by 60% on a 1 year basis. Year to date, up 21%. So does that make Mr Price hot, having crossed the 100 rand mark?
Look, I think they've converted what effectively was a Rackham and Stackham factory store into what's now an aspirational fashion retailer for a certain sector of the market. So, in my view, absolutely a hot stock.
Absolutely hot, even though it's trading near record highs.
Yeah, that is the problem. Look, it's not like they've got no competition, because they do have big basement stores like Melts and so on trying to compete for the same target market. I like the fact that they've gone into the sports stuff with that Max brand, and they're using the Sharks to advertise them and so on and so forth.
Of course,
but the share price,
they're from Durban.
Exactly. The share price is high. I mean, it clocked northwards of 100 rand a share, which is almost impossible to believe given where it was a few years ago. What a great success story, a real South African success story. But I do foresee further growth. So even though the PE is quite high, I think they're going to continue to deliver. So yeah, I think it is still hot, although hardly an undiscovered gem.